we as an industry have been advocating for no regulation, or at least no negative regulation of crypto and specifically DeFi. And I think that's a great place to start. Yes, absolutely, it's important that there is not regulation passed or interpretation of current regulation that really kills DeFi to some extent or hamstrings it. But I think we really need to start escalating the conversation to, okay, what's next? And what's next should be, how should DeFi be regulated?
GM, everyone, and happy Tuesday. I'm Andre Bagansky, the head writer of Coinage, with a show to you today joined by Antonio Juliano, founder and CEO of dYdX. We're here to talk a little bit about perpetual futures and decentralized exchanges in general. Welcome to the show, Antonio. Nice to have you on.
Hey, thanks so much for having me.
Just to start out, would love to get your thoughts on why perpetual futures are such an important part of the crypto markets and the way you think about them at dYdX.
So derivatives are something that's always important in every market. And I think especially in crypto, where really the market centers around trading and speculation, they've come to be by far the biggest way crypto is traded. And the reason for this is because you can trade effectively anything with derivatives, and you can also trade it with leverage. So it's a more sophisticated type of product to trade. But as people come into crypto, want to trade, it's a really great place for them to level up on their sophistication of trading. And actually in the market right now, we see the bulk of trading volume overall in crypto happen in derivatives. And specifically, as you mentioned, the most popular type of derivative in crypto is something called a perpetual contract. And this is just a contract that, as the name implies, never expires. So you could trade a Bitcoin perpetual, an Ethereum perpetual, or effectively a perpetual on whatever you want. And it feels like you're trading the underlying asset, but you can trade it with leverage, you can go short, you can do a lot of advanced trading features around that. So that's one of the reasons they've become so popular.
Yeah, Antonio, you talk about the level of sophistication that dYdX offers for traders, and I think that's a really good place to start because, obviously somebody who's just getting into crypto, maybe they buy it in Robinhood, maybe they get it in Coinbase, and maybe they start to interact with decentralized exchanges when they start, using self-custodial wallets, but, derivatives being a step up beyond just spot trading itself. Not a lot of decentralized exchanges in crypto right now, it seems, that really do lean heavily into futures and perpetual futures. In this case, it's worth pointing out that you guys are pretty large in terms of the amount of derivatives that get traded. You guys traded $1.2 trillion worth of derivatives in the past 24 hours, according to CoinMarketCap, and $1.7 trillion when it comes to Uniswap. So really just behind the competitors. Interesting. What are your thoughts on why there's a need for these types of decentralized exchanges in crypto as opposed to just something like spot?
So 1.2 billion rather than trillion, but we'll get there someday. I think we had over a trillion traded last year. But yes, it's quite a lot. So to give you a sense, pretty much the overall trading volume in crypto is around $100 billion a day right now, including things like the centralized exchanges, Binance, OKX, etc. So decentralized exchanges are still smaller than that. However, there is some real volume going through right now. So I think derivatives are exciting, and there's a lot of new things that you can do with them. I think in terms of why is spot, i.e. normal trading, bigger than derivatives in DeFi right now? I see the market as something that builds up over time in terms of sophistication. And this is really something that we saw happen in centralized exchanges on crypto as well. First, there were spot exchanges, so Coinbase and others. Then there were more sophisticated exchanges like Bitfinex, which introduced margin trading. And ultimately, the product that won in centralized exchanges was perpetuals, so popularized by BitMEX and FTX, and now widely traded on Binance and others. And I think this is an evolution that we're currently seeing unfold in in DeFi as well. Right now, we have around the same amount of volume as Uniswap, the largest spot decentralized exchange, but I think that will continue to grow over time. Right now, in centralized exchanges, we see about 3/4 of the trading volume happen in derivatives and only 1/4 in spot. and it's about even in DeFi. So yes, we are the leader right now in terms of DeFi plus derivatives. There's actually a good amount of competition in the space right now as well, because in my opinion, it's become something that is fairly obvious as we see the market move more towards DeFi over time. And it's really, we see even centralized exchanges acknowledge that the shift is happening and that DeFi will be the way crypto is traded in the long term. I think derivatives will play a really big part in that.
Well, you say it's an obvious sort of path to growth, and I find that to be one of the things that I learned early on when it came to dYdX, is it's really sort of looking at traditional financial markets and saying, hey, if crypto is going to resemble this in some capacity, then a decentralized futures exchange or perpetuals exchange makes a lot of sense in this scenario. I also think when it comes to DeFi, there's a lot of focus on it being a permissionless sort of part of crypto. And I saw a tweet on your account that said that permissionless market listings are coming to dYdX in the coming months. Can you just explain how the listing process for this works when it comes to these different perpetual futures that are offered through dYdX and how that's subject to change?
Yeah, so I'll start with how it works today. So on the dYdX chain, which is the main dYdX protocol at this point, listings happen based off of a governance process. So we, the core team, don't have anything to do with this. It's just anybody can propose a new market to come and trade on dYdX, and then there's a governance vote about whether that should be added to the protocol. That's awesome. That's fully decentralized. However, there are some issues with that as well. It's hard to list things quickly, and it's hard to list as many things as you possibly could. So the biggest solution that we're working on developing around this is what we're calling permissionless market listings. And this is very similar to what exists on, say, a Uniswap or other spot decentralized exchanges right now, where, again, anyone can come, but all you have to do is send a transaction to list a new market on dYdX. And we feel that's something that is likely going to be very powerful. And I think this is one of the main things on spot decentralized exchanges that spurred a ton of the growth. And now we see thousands of markets being listed on spot decentralized exchanges. To give you a sense, on dYdX right now, there are about 50 markets. So we have a long way to go to compete in terms of the number of assets and the speed of listing of these assets, which can be traded on dYdX. But this is also something that I feel we've really seen be the cornerstone of what has become popular in crypto for a lot of years at this point. It's like back in 2020, the real boom at that point in time was Uniswap. Now, for the first time, anybody could come to an exchange, create any asset, and list it on an exchange immediately. Then we saw a continuation of this with NFTs a couple years later. It was a new type of asset class and an order of magnitude more assets that could be traded. And the recent meme coin craze is just a continuation of this as well. It's like, wow, it's so easy to create these markets on Solana and create these assets on Solana that people are flocking there, and that's where they want to trade. So the thesis is that we don't need to create these assets on dYdX, but ideally everything within reason could be tradable on dYdX. And the best way to do that is to put the power in the hands of the users and just allow them to start trading whatever they want with no intermediaries. That's really the vision that we've been working towards for a long time, and something that's uniquely enabled by DeFi.
Yeah, and in terms of the listing process, it sounds like you guys are going to have an explosion of different markets in the future potentially as a result of that change. And we've got some token listings that I wanted to show on the screen right here, because when you look at sort of the open interest among these different tokens on dYdX, it's fairly standard. It goes Bitcoin, Ethereum, and Solana. But I was interested to see Dogecoin below there at sort of, I guess that's 3.7 billion, a little far away for me to
No,
see.
yeah.
But I'm sort of curious, how do you think that these smaller tokens could potentially benefit from having perpetual futures? And, just how does it impact the way that these tokens trade generally?
So there's always going to be a power law distribution between what is traded on any exchange, and looking at the numbers there, that's exactly what you see on dYdX as well. And that's not something that's going to go away. We've spent many years at dYdX really trying to build a first-class trading experience for derivatives, and specifically the most widely traded derivatives, i.e. perpetuals on things like Bitcoin, Ether, Solana. in DeFi. And we've done a good job with that, and I think the results speak for themselves. But I really think the new focus for us is number of markets, as I've been talking about. And I think that's something that has a lot of synergy with an exchange for which there is powerful trading tools, and you can market to really professional types of traders, whether those are institutions or international retail customers. So I think it's the new markets are really something that bring a lot of new users to the platform. So really what you want to trade in crypto right now and for a while at this point is the hot new tokens. You always want to be able to trade whatever the newest thing is as fast as possible. And I think exchanges have gotten that down at this point. So on decentralized exchanges, that's happening really rapidly. Even centralized exchanges to some extent are listing things quickly. So dYdX, I think, with permissionless market listings, hopefully will be at the forefront of everything will be immediately tradable on dYdX. And that's a really powerful value proposition. And then pretty much everybody in crypto thinks of trading in two different buckets. It's like, I want to trade the hot new things, and then I want my stable, or at least stable for crypto bags, to be tradable on this platform as well. So your Bitcoin, your Ether. And you really want both things on the same platform. So because have already started with a great trading experience around the core stuff, having the new markets is really the thing that we're focusing on adding. And I think both of those things together create a really powerful product.
Yeah, and it keeps one that's at the forefront of people's mind, right? Like if you're able to adapt in real time to these sort of situations, I mean, it makes perfect sense. I think, when you mentioned international retail traders who are sophisticated and institutions, do you have any idea of the breakdown right now in terms of like who's using dYdX and whether they are individuals or an institution, if you will?
So both exist, and I think that's a really awesome thing to allow those two types of customers to trade with each other. To give you a sense, most of the number of customers are retail, but the bulk of the trading volume happens from institutions. However, I really think that the sophisticated individual retail traders are the most important customer because that's where the organic volume is coming from.
Hmm.
For the institutional type clients that trade on dYdX, they serve two purposes. I think the first purpose is providing liquidity. So dYdX works with a lot of different market makers because it's an order book based model to provide liquidity on these assets. And then also, I really think of these institutions, think like HFT firms or things like that, as a multiplier effect on the organic volume that happens from individual retail customers. But really, those types of customers, they don't have quite as big of a value proposition to use DeFi as some of the individual retail traders. They really just want to focus on chasing that retail volume, that organic volume around wherever it is. So if you're an exchange or an exchange protocol, really the thing you want to focus on is these individual retail players, because that's where the new stuff happens, the organic volume happens, and then the institutions will just trade around that, provide liquidity. So I think those two customers are both very important for how we think about the product and protocol breakdown in terms of what we build for each customer base. Really, the institutions are trading programmatically. So
Hmm.
these are trading bots that integrate directly with the API or with the blockchain itself. And they're trading at a very high rate. And then for the individual customers, that's really where you have to think about developing products, i.e., a web front end, or there exist mobile apps, things like that, to actually make it really easy and really powerful at the same time for those individuals to trade on the platform. So we think of both, and I think bringing them again to the same platform creates the best results.
Sure. I think that's very well put in terms of just like, retailers or individuals being sort of that organic, really the secret sauce is what it sounds like. I want to just kind of take a step back and talk about DeFi generally when it comes to institutions, because I think people are on Wall Street, they understand the ETF, maybe they understand the halving, but I think DeFi is probably one of those things where you get a lot of questions from people in traditional finance, sort of either fears or concerns. Like in terms of Wall Street warming up to decentralized finance, where would you say we are on that arc?
So I'd say it's a bit of a pendulum. Wall Street was fairly hot on crypto a few years ago, and I think to some extent that's coming back with the recent bull market. there's a number of things that impact the pendulum, whether that's regulatory pressure or whether that's positive price action or general influx of retail type users. I think right now, especially with the ETF, that's a product that's more going to be used by long-term investors of crypto, right? Whereas more what we're building is on the other side of the spectrum of active traders. So there had been a lot of Wall Street firms that were trading in crypto, and some of whom were trading on dYdX historically. There's some of that now, a little bit less than there was a few years ago.
Hmm.
But again, I think this is a pendulum that swings back and forth. And ultimately, really what these firms want is to try to effectively do what I was just saying in my previous answer, chase a lot of the volume around wherever that is. And a lot of that is moving to DeFi. So I think from that perspective, it is a space that is really exciting for Wall Street participants, especially things like HFT firms, hedge funds, stuff like that, to trade in DeFi. And we've really done a lot of work to make dYdX the best in class option to effectively make it feel like these firms are trading on a centralized exchange as much as possible. And I think that has made dYdX a really great stepping stone for a lot of these firms into DeFi. So a lot of these firms will trade on dYdX for the first time as they're getting into DeFi, because again, it feels more like a normal exchange where it's marrying a lot of the best things about the existing financial products that they use, the existing exchanges that they use, with some of this new really exciting stuff that you get in DeFi.
Yeah, and chasing volume, that makes me think of this Solana meme coin explosion that we've had, where I imagine a lot of people are interacting with decentralized exchanges for maybe the first time as they start to get into Solana and they start to look at these. So, it's interesting to see how that could be a driver of on-chain volumes, and I guess, further the use case in terms of why institutions should potentially tap dYdX. I think when it comes to the regulatory clarity in crypto, people in the US, advocates, definitely not too key on it. And I think when it comes to DeFi in particular, there's a lack of regulations in the US, or a lack of regulatory clarity for that matter. And I saw an interesting post on Twitter from your guys' chief legal officer, I believe, Rashawn Colbert, and he sort of relayed some of your key principles for what DeFi policy should look like. And we have those up on the screen. Maybe we can leave them up for a while. But I found it really interesting for you to sort of highlight these different things where we want safe and transparent mechanisms, accurate and complete information with these protocols, financially and technically secure protocols, equal access, which I think is another one where you talk about that institution retail dynamic, empowering law enforcement to be able to recover funds in incidents, and to have these protocols be freely developed to promote competition. And, my question for you is, which one of these do you think is the most important thing in DeFi, and which one do you think gets overlooked sometime?
Great question. So, yeah, just a little more background on these policy principles. That's something I put together a couple of weeks ago, and published in a blog post. And I think is something that's a really important evolution of the conversation that we in the DeFi community more broadly are starting to have with policymakers. And I think this conversation for a long time has been simple and been right. And I absolutely agree with it, but been simple in the sense that we as an industry have been advocating for no regulation, or at least no negative regulation of crypto and specifically DeFi. And I think that's a great place to start. Yes, absolutely. It's important that there is not regulation passed or interpretation of current regulation that really kills DeFi to some extent or hamstrings it. But I think we really need to start escalating the conversation to, okay, what's next? And what's next should be, how should DeFi be regulated? And I think a lot of my peers in the crypto space would be like, what are you talking about? This is just software. You can't regulate it. It's decentralized. Yes, I get it. I've been building in crypto for quite a long time now. But actually, I think there are really important ways that regulation can play a positive role in what DeFi is. And I think this is just a lot of standards around stuff that the crypto industry is already doing, like security standards for how the code is developed, standards for, as you talked about, everyone should have equal access to these platforms. That's just really enshrining what is decentralization. Things like how can we recover funds or really lean into some of the benefits of DeFi and that it's extremely transparent. and other things like that. So to go back to your specific question, if I had to pick one in particular, I would actually focus in on the equality of access piece, because I think this is something that's very exciting about DeFi. And people have talked about this or talked around this for a long time. But this really fundamentally does not exist in nearly the same way in any other piece of financial infrastructure in the world today. For the first time, we can build these systems where everybody has exactly the same access to, and you can't pay for better access or anything like this. And anybody anywhere in the world can have exactly the same opportunity as your biggest Wall Street fund can have. And I think that's just a really exciting new concept that hasn't existed before, and something that's uniquely enabled by this technology. I think it's so important that this is our stated mission at dYdX, is to democratize access to financial opportunity. And I think that's just another way of saying, yes, there is this financial opportunity out there. Is it purely positive or negative? No. I mean, I think that there are reasons to trade with leverage, and in some cases, and there are reasons to be educated or careful about doing that. But really, everybody should have the same access of opportunity or equality of access to these platforms. And that's really what we're trying to create here at dYdX.
You talk about the democratization of access, and I'm reminded of a conversation I had recently with the founder of ETHscriptions, who said that creating blobscriptions was just the basic principle of, everybody should have equal access to this, and it shouldn't be just purely establishment, like you should interact solely with blobs through the facilitation of an L2. So interesting to see parallels in some regards on that front. When it comes to dYdX, it's my understanding that there was some downtime earlier this week because of a scheduled upgrade and a resulting bug fix that took place when it came to dYdX chain. And I came across a self-described dYdX validator that goes by Crypto Learning Club online, and sort of had some data saying that 3.4 million worth of liquidations took place 30 minutes after that trading resumed on dYdX. And I'm curious in that regard, who bears responsibility for these liquidations that happened, especially in a decentralized context, and how might compensation for these people that were liquidated be determined theoretically?
Yeah, so first, just a little more insights on the incident that happened yesterday. So the dYdX chain was halted for the first time for about 8 or 9 hours or so before resuming, and the root cause of this effectively was a software upgrade. And I won't go too much into the weeds here, but it was something that was caused by us upgrading the version of the core Cosmos SDK node software, and that causing an issue with a data store. So I think this comes from a place of really trying to be innovators on a lot of the software that we're developing. And that's something we pride ourselves on at dYdX, always trying to push the bounds of what's possible to build with whatever technology that we're building on. And dYdX is built on a lot of different types of technology. Historically, we were one of the first protocols to be built on Ethereum L1, one of the first protocols to be built on layer 2 based on top of Ethereum 3 years ago, way before anybody was talking about L2s. Fast forward to today, one of the leading Cosmos chains, obviously. So not to deflect blame at all, it is something that we take very seriously. But also, this is just something that I think comes with the territory a little bit. And we really try to strike a balance between fast innovation and reliability. And especially when we're pushing the bounds of things, there may be times like this where incidents happen. So to go and zoom in towards your specific question around what specifically happened yesterday, and then call it who bears responsibility, or what might compensation, other stuff look like around that. So this is really the dYdX chain is not operated by us. So we just developed the software around it, and the community itself and the validators run this software. So it's really not something where we have a vested interest or a stake in what's happening on the chain itself. So because of that, and really this is what we've been pushing towards as a DAO and as a community around dYdX, it's really up to the community to decide how to handle this going forwards. And I may have my own personal opinions on how that happens, but that's the first point I want to make loud and clear. And this, I think, is the upshot, and potentially, if you want to think of it this way, the downshot of having these systems be fully decentralized, it's really not up to us. Like, we don't have control of any of the funds on the platform, and the community could come in and have votes to, say, compensate people who may have been liquidated or things like that. But my personal opinion on that is that it should be considered by the community, but I don't have a strong opinion either way on whether it makes sense to do or not. I think this is something that happens often in exchanges in crypto. Not to dodge the blame too much, reliability is something we take seriously, but there unfortunately just are downtime right now on pretty much any crypto exchange that you're going to use, and when trading with leverage, that can equal liquidation. So I'll leave it at that, and I think it is something that the dYdX community could consider, but not something we're thinking too much about as the core team.
Let the DAO decide. That's a good way to go about it. And, when it comes to Cosmos, right? Like you guys going from Ethereum to an L2 to Cosmos, one of the things that I've learned as I understand that space a little bit deeper is I see vibrant on-chain governance for all of these different projects within Cosmos. Do you think there's something just unique about that ecosystem when it comes to people who are really plugged into how DAOs work and maybe I guess enthusiastic about participating in DAOs?
I would say so. And there's actually an extra network participant in Cosmos when you're building your own chain in the validators themselves. So it's very cool that a lot of the validators do play a pretty active role in governance. So on dYdX right now, there's effectively three classes of participants in decentralized governance. Two are the classes of users I talked about before in the individual traders, or at least token holders that exist in the dYdX ecosystem. And then another really big participant in governance right now is the trading firms. And I think that this is a really interesting evolution of how exchanges operate. It's like, could the actual users of the platform really control that platform overall? And for the first time, that's possible in DeFi. So we have those two classes. And then the third class is the validators, or more generally, just the kind of institutional ecosystem participants. And really, this is just something that's evolving over time. I do think governance works pretty well right now. One of the things we have going for us at dYdX is that there's relatively a smaller amount of participants in dYdX than there are on some other platforms like a Uniswap or an Ethereum. And that's just because we're building something more sophisticated here, and there's always going to be a smaller number of participants, but ones that are more sophisticated and, in my opinion, care more about the product and ecosystem that they're using. So because of this, I do think we have the benefit of people paying a lot of attention to dYdX governance. And there's a lot of really cool, interesting tools in the Cosmos SDK and the software that we're developing to enable that.
Yeah, I mean, quite sophisticated, Antonio. And when I talk to you, I sort of get this sense that it's almost like build the coolest, most sophisticated thing that plays true to sort of not only the ideals of crypto, but also traditional finance, and the people will come, if you will. And I think, for someone like me who considers themselves to be like kind of like an average crypto user, it's cool to sort of see your thoughts on the edge of the horizon when it comes to the things like democratizing derivatives. Just sort of as like a closing question, I would love to get your thoughts on like what keeps you up at night when it comes to decentralized finance and the way you think about its future.
So I think dYdX has been fortunate. We've been around for over 6 years at this point, and now we are one of the leaders in DeFi. So it's caused me to really zoom out and think about bigger questions like, what could DeFi be? How do we, as those building in DeFi, create DeFi and to build something that actually is really valuable and is the predominant way crypto is traded? And for a long time at dYdX, we've really tried to build something that's felt similar to a centralized exchange. And I think that was a great place to start. But it's really the questions I'm starting to think about now is, what could the dYdX product, or what could products in DeFi more generally look like that are uniquely enabled by the technology? Like, how could we build something that fundamentally has not existed before and will capture and create the bulk of the value within crypto? So it's really open-ended questions, but I think we've gotten to the place now where we're big enough that we have to think from an industry perspective, how does DeFi grow against centralized exchanges? And ultimately, hopefully, how does DeFi start growing against traditional finance, and how do we build this into something that really matters, and it has to be big because of that. So it talked about the current hypothesis and just enabling a ton of markets to be traded through permissionless market listings. I think there are other things to be excited about. Touched on, can this platform really be one of the first that is controlled by its users, and that is fully decentralized? And I think the combination of these things and other things we'll develop in the future will build dYdX and DeFi more broadly into something that actually makes a huge impact on the world. And I think to be able to do this, you have to zoom out and think longer term. And I think that's very hard to do. And really, I challenge myself and dYdX to think on a 5 to 10 year cycle going forward. So that's not to say we're not going to do anything interesting in the next months or years. We absolutely will. But really, how do we come up with a plan for 5 years, 10 years? How is dYdX one of the biggest exchanges in crypto, period, not just DeFi? And that's the scale that I think on. And I think we have to continue to make big bets, take big risks to make that happen. And that's something we'll always do at dYdX.
Yeah. And, when you talk about 5 years, 10 years, I imagine there's probably some notion that, regulation or court decisions, like as those sort of cases that we're currently seeing work their way through the court system, maybe we get clarity on that front. Hopefully 10 years from now, we're not in the same situation that we are in currently. But, one of the things that happened is this week, AV Eisenberg, known for the Mango Markets exploit, is facing criminal fraud and manipulation charges for allegedly taking $116 million. Our opening arguments were made today in the case, and Eisenberg's lawyer specifically pointed out that, quote, they weren't operating in the regular financial world when he made his opening argument. And that's according to the Inner City Press. He also said that, quote, his client simply executed a winning trading strategy. And I think this case really gets at the heart of code is law in DeFi. I'm just curious how you think maybe this court case could challenge that and other things in 2024, this notion that code is law in DeFi.
So code is absolutely law in the sense that, the platform he was trading on, i.e. Mango Markets, is decentralized or decentralized to a certain extent. So potentially the developers of that platform should be treated differently than the operators of an exchange. However, this case in particular in Mango Markets is extremely clear market manipulation, in my opinion. So it's still, and this is sort of what I was talking about in my policy principles, and I think actually a really big positive of DeFi in that it's so transparent. It's really easy to find actors that are doing attacks like this, and it absolutely is illegal, at least in the United States, to do market manipulation in the way that he did. So this case in particular, I don't have a ton of sympathy for, because it's just using a piece of software or an exchange in a way that should not be used. And there are laws around that, and there should continue to be. And this is kind of what I was talking about in the policy principles. Now, there are many other cases that I find a lot more encouraging, i.e., for example, the Coinbase case against the SEC. I think Coinbase is fighting the good fight here and making a lot of really good points and winning, not all, but at least some so far, of the arguments that they're making. And one thing I felt slightly encouraged by is in the Coinbase versus the SEC case, they threw out the parts about classifying the Coinbase wallet, I believe, as a broker, or at least something that should have been regulated. And I really think this starts to speak to the courts, if not the regulators, starting to understand what decentralized technology is, and that non-custodial platforms should be treated differently than centralized ones. So there's some positive things, some negative things going on. Some ways laws should continue to be used, and some ways they should be changed. It is complicated, but I think we have to start having this conversation with policymakers and regulators, and we're seeing that start to play out.
Yeah, I mean, SEC versus Coinbase in the Southern District of New York, overseen by Catherine Polk Fela, who, for me, in terms of judges, I look at some of the cases that she's had, and I'm like, wow, she knows DeFi. I'm thinking of a class action lawsuit that she dismissed last year, brought by Uniswap traders who said, Uniswap is liable for these scam tokens that burned us, and went into sort of the nuances of liquidity pools and sort of said, like, this is effectively like trying to sue somebody for facilitating a drug deal on Venmo is the sort of analogy that she used. So definitely interesting to see judges sort of catch up to this and really wrap their brains around it. Any parting thoughts, Antonio, before I let you go?
No, I think this was a great conversation. So I guess the thing I'll leave everyone with is there is a lot of exciting stuff starting to happen on dYdX. The dYdX chain was just released a couple of months ago, and we're already seeing over $1 billion a day of trading activity. There's a lot of things that are exciting that are coming in the pipes. So things like permissionless markets, we didn't get to touch on this too much, but another thing that's just about to go live on the dYdX chain is automated market makers for the first time. So this is a form of liquidity that will supplement the order books, and that I'm really excited about, enabling a number of new markets to be traded on dYdX, because you can list the markets, but you still have to have liquidity on them. And we've seen AMMs work really well to solve that use case. Number of other things from trading features to others. We're actually working on integrating COSM WASM right now, which for those who aren't familiar is something similar to the EVM on the dYdX chain. So it's a general purpose smart contracting environment. And I think there's a new narrative that's going to start to form around some of these specific app chains enabling general purpose computing or smart contracts. And I think this is actually even more exciting than just your next new general purpose L1, because they can integrate with the core app on some of these chains in a really interesting way. It's like you could write a smart contract that places an order or does a liquidation or something like that on dYdX. And there's just a lot more powerful tools to work with. So that's something I'm excited about as well. And all this stuff is coming in just the next couple months.
That does sound really exciting. Thank you, Antonio, for joining the show, and I hope to talk to you again soon. Really appreciate the perspective on DeFi, derivatives, and perpetual futures. Really exciting stuff. And that'll be it for me, Andre Vagansky, head writer at Coinage. Make sure to check out our website, subscribe to our YouTube channel, and follow us on Twitter. That'll be it from me. Take care.